Okay, hi, good afternoon, everybody. We are almost done with the year. We have, what's that? I think 6 or 7 days left, and then the year is done. So, today we're going to talk a little bit about why the RSI is still one of the, if not the king of indicators. It is a truly exceptional indicator. It's been around for ages, but a lot of people still use it in a very in the wrong way. So we're going to have a look at that. I'm going to explain to you guys the way that I prefer to use the RSI. We're going to look at different ways that the RSI can present itself. I'm going to explain to you guys exactly what the RSI actually is, and hopefully when we're done with this video, you guys will have a much better understanding of how the RSI works, how to use it properly and successfully. So if at any time during the stream you guys have any questions, please feel free to ask. I do have the chats open, so if you want to ask a question, if there's something that you want clarity on, please feel free to ask, and I'll try to answer to the best of my abilities. Okay, so without any delay, let's get to it. Okay, so we have, everybody knows the RSI. Every trader at some point has had the RSI on their chart at some point, and this is what it looks like when you usually add it, and this will be true for all platforms. You will have a clear overbought area, you will have a clear oversold area, and then you have this choppy line in here, which is the RSI. Now, this is what the RSI looks like traditionally, and I'm going to add another one, and I'm going to show you guys the way that I use the RSI. First of all, so we can see the difference between the traditional one and the way that I use it. I'm going to leave the period the same, but I'm just going to make a visual change to it. I'm just going to make this line a little bit thicker, and I'm going to change some settings here. I'm changing the opacity of the overbought and oversold lines, which I actually recently realized that I don't need to do. I can simply take them off. Okay, so now we have the exact same indicator. This is the RSI. You will see that it looks exactly the same as it does in the normal one without the changes, but we now see a very pertinent middle line here, and I don't even see the overbought and oversold zones. They would be there, but I just switched them off. If we switch them back on, that's how we can see them. Okay, so one of the key mistakes that people make with the RSI, I've seen so many traders, especially people that are really new to trading, they just slap an RSI onto their chart, and the first thing they do is they sell when it's in overbought and they buy when it's in oversold. And they do this without really understanding what the RSI is and what it actually is showing them. So the first thing we need to really understand and wrap our heads around is the fact that the RSI is a momentum indicator. This means that the higher the RSI moves, the more momentum, bullish momentum the price is displaying. And the lower the RSI falls, the more bearish momentum the price is displaying. So we can see this clearly if we look at this upward move here. If we look at the traditional RSI, if you were trying to take, by the way, we are on a 1 minute chart at the moment. So if you were trying to take trades or sell trades on the overbought area here, you would not have had a great time. Whether you were doing 1 minute trades, 3 minute trades, 5 minute trades, you might have gotten lucky if you hooked one just the right candle. Any of the other candles around it would have been a loss. So we can clearly see that if we took a 2 minute or 3 minute trade here, that would have been a bad trade. 1 minute, fair enough, would have won. In this case though, as soon as the RSI went into overbought, it doesn't matter if you took a 1, 2, 3, 4, 5 minute sell here, this would have been a loss. So the RSI is, although a lot of people do try to use it as sell in overbought and buy in oversold, it usually ends up badly, and they realize this fairly quickly. And then a lot of people think that the RSI is a useless indicator, because people think that if it's in overbought, I need to sell. If it's in oversold, I need to buy. And as long as you cling to that concept, most oscillating indicators, with that I mean the RSI is an oscillating indicator because it moves between two set points, which is 0 and 100. That includes the stochastic oscillator. That includes the Williams percentage R. It includes the CCI, the MACD. All of those are oscillators. And as long as you have the perception of I have to buy in, sell in overbought and buy in oversold, you're going to struggle, and you're going to have a hard time using that indicator to its potential. So to demonstrate why I'm doing this is why I switch my RSI to I make the 50 line pertinent, and I kind of like blur out the overbought and oversold signs. For the most part, when I'm trading, I simply take them off. I completely ignore them. The reason for this is it's a very, very simple concept. The more momentum something has, the harder it becomes to stop. Okay, so this is general. You can think that the faster a car is going, if you are driving at 60 kilometers per hour and you hit the brakes, you're going to stop within a few meters. But if you're driving 200 kilometers per hour and you hit the brakes, it's going to take you much longer time to come to a stop, because the vehicle has so much more momentum. The more the speed increases, the more the momentum increases as well. So yes, velocity. So the higher the velocity goes, the more momentum something is gaining. So even if you are driving at 200 kilometers per hour, if you just take your foot off the gas, that car will keep on going for quite a while, because it's got a lot of built up momentum stored. And the same thing goes for trading. So if we look at the RSI from that viewpoint, we then start thinking, we can see that as the RSI is going higher, we can see that price is pushing higher as well. And as the RSI is going lower, we can see that that price is going lower as well. It's gaining momentum. It's starting to move faster and faster. And this is we have some good examples of this here. We can see, if we take into account this move here, so we had an upwards move and the price flattened out for a little while. If we look at this area here, this was not upwards movement. We had the pullback, the push, the pullback, and then the push again. Now, if we look at the RSI from this area here, it started pushing up, went to this level here, which is 71%, and we can see that it was a short move. Price rested and started pushing again. If we look at the way that the RSI was going higher, here we are on 79, probably 80 if I'm measuring correctly, 79 or 80. So the RSI went higher on the second push, and we can clearly see the difference in the candles between this move here, and we can see these big green candles pushing up here. So the higher the RSI goes, the more momentum price has, and the faster it's moving. So when this is happening, I do not want to take sell positions, and I will much rather look for a reason to take a buy position instead of a sell position, because sell position in a move like this is almost always going to end badly. Okay, so trying to pinpoint reversals is not the best idea. Reversals works really well when price is ranging. When price is stuck in a range, that's when you want to do your reversal trades. But when price is moving in a direction, if it's trending in an upwards or downwards direction, you don't want to go against it. So you've probably heard many times from many sources where people say that trend is your friend. I'm not particularly fond of that saying, because it doesn't explain what it means. Many people think they must just take trades in when price is trending and not trade when it's ranging. This is very far from the truth. But when price is trending, you want to go with it. So you don't want to go against the trend. When price is in an established trend, you really don't want to go against it. Don't try to pick the top or find the top. Don't try to find the bottom. Instead, just go with the direction of price. It's a lot easier to find entries when price is trending. It's suppose price is trending upwards. It's a lot easier to find buy entries than it is to find sell entries. You're going to get a lot more entries, first of all, and your win rate's going to be a lot higher if you're going with buy entries in a bullish trend. And if you are in a bearish trend, you're going to have much more success if you're just looking for sell trades. Until you can see that the price has actually started changing directions, then you can start looking for buy, going in the opposite of the previous trend. But while price is moving in an established trend, just go with price. Okay, so for ranging, we're going to look for reversals. For trends, look for the continuation entries. Look for if prices are going up, look for buys. If price is going down, look for sells. Okay, so that's the first thing. So we can use the RSI indicator to tell us or to show us the momentum that the current move has, and we can use this to our advantage. Let me show you how. I'm going to add a moving average to my chart. And this is going to be a 50 moving average. Let's just make it a little bit thicker. Make this line a little bit thicker there. Okay. When we add moving averages to our chart, we can see that often, not always, but often, on a regular basis, price respects the moving average. And you can do this with different period moving averages. I like to use the 50, the 100, and the 200 moving average because these are considered the classical moving averages. Let me just, while we're busy with it, let me just add them to the chart quick. We're going to make this 100. We already have a 50. We're just going to change the color. We're going to make the 100 red, and then we're going to add a 200 as well. There we go. Now, in your shorter time frames, you most of the time you're going to interact with the 50 and the 100, and in that order as well. 50 will get most hits, then the 100, and then the 200. But they will all get hits. What do I mean with hits? If we look at the movement of price at any given area, we can see that it quite often respects the moving average areas, and it becomes very clear that on a regular basis, price uses moving averages as dynamic support and resistance. Does this mean that if price is moving downwards, as soon as it touches, I'm going to take a sell trade? Absolutely not. Okay, so we're not going to use, you can't determine where the price is going to bounce or break through a moving average, but we can use the RSI to tell us what price is going to do. Now, if we take this example here, we were moving in a downwards direction here. We broke through the 200 moving average. Keep in mind, while we're doing this, we are using the moving averages as dynamic support and resistance areas. Okay, that's important. So the moving average is a support and resistance area. It does not matter whether it's falling, whether it's climbing. It's irrelevant for what we're doing here. Doesn't matter what direction it's going. We are only interested in the actual level at that moment in time, because this will be a dynamic support and resistance area. Okay. So actually, before we do this, let's just cover trend quickly. A bullish trend is defined as price making higher highs and higher lows. A bearish trend is defined as price making lower lows and lower highs. That's how you can determine fairly quickly whether you are in a trend or not. Once you establish that you are in a trend, it's very simple to start looking for continuation entries. And here is a beautiful example of how we can use the RSI combined with support and resistance. For what it's worth, we're using the moving averages right now, but you can use manually drawn in support and resistance levels. You can use channels that you draw in, any form of support and resistance. You can use Fibonacci lines. For this video, for this purpose that we're going to do for today, we're just going to use the moving averages. I'll touch a bit on channels and such later on and show you guys how it works, but for now let's just stick to the moving averages. Just want you to know you're not limited to moving averages. Okay, so we have price starting to move in a downwards direction. We can clearly see lower highs, we can clearly see prices making lower lows. Okay, now that we've broken through the 200 moving average here, we can see now that prices started pulling back, and we know that once support is broken, price often comes back for a retest. So now we're sitting here and we're watching, and we see that price respected the 200 moving average. At the same time, I'm looking at my RSI. My RSI went bearish. When at the start of this bearish move, we can see the RSI started dipping, pushing up every now and then, but eventually we fell below the 50 line. So this is showing me that price has bearish momentum. The RSI came back for a retest of the 50 line. At the same time, that price went for a retest of the 200's moving average. And as soon as that both of them rejected at the same time, this is where I started taking sell trades. So if we took a 3-minute or 5-minute sell on this candle here, this red one would have been the candle that rejected from both the moving average and the RSI 50 line got rejected at the same time. So this candle here definitely rejected from the 200 moving average, but if I look at my RSI for while this candle was still open, I can see that my RSI hasn't turned down yet. It's still testing that 50 area. So this would not have been my entry candle. This would have been my entry candle here, because on the close of this candle, I can clearly see how the RSI rejected. It turned downwards quite sharply, moved away from the 50 line. So this is telling me that bearish momentum is still maintained. Price still has bearish momentum, and this is most likely just a small correction, and that price will continue its way downwards. And indeed, that is what happened. And we can see this everywhere on the chart. It won't always be that the touch of the moving average and the RSI test of the 50 line happens at the same time. That won't always be the case, but they happen at the same time quite often. And these are entries that I try to never miss. If I see it forming, I try to go with it. So we can look at a lot of examples here. We can see how price pushed up here. It came close to the moving average. RSI tested, pushed back down. We had the same exact thing happen here. We had the same thing happen here. Although this would have been a dodgy move here. If you took a sell on that candle there, you might have had a bit of trouble. But you had a couple of tests underneath this moving average here. So I don't necessarily always wait for price to actually hit the moving averages, but price needs to get close to the moving average. Otherwise, I'm kind of in the middle of nowhere, and I don't like taking trades like that. And this is also going to be true for when price is moving upwards. We can see the tests when the price gets rejected. This would have been, if you look at here, where price came down a little bit and the RSI rejected. And every time it does, it tells me that bullish momentum is being maintained. So the RSI is I'm using the RSI to show me how much momentum and whether the momentum is changing bullish or bearish. So at this point in time, we have basically sideways movement on the RSI. It's not moving in a direction. This is basically flat. So this is no momentum. 50 line is no momentum. As the more we go above the 50 line, the more bullish momentum. The lower we go below the 50 line, the more bearish momentum we have. It's a very simple concept. It's a really, really simple concept. Let's see if we can find a channel quick. Did this make a nice channel? Even if it's just a short channel, just for demonstration purposes, would be nice. Let's just see if we have a... Okay, so we can see that even if you have a channel, let's just mute this for a second. If price is moving in a channel, we know that the bottom and the top part of the channel line acts as support and resistance, and we can clearly see how the RSI is showing us that it's not breaking through. So every time we touched here, both the times we touched here, we excuse me, we had the test of the RSI on the 50 line, but the RSI remained bearish, and we had trade opportunities there, plentiful. Okay, so you can use channels, like I said. You can use Fibonacci lines. You can use normal support and resistance. Let's see if we can find a decent support and resistance level where this actually happened as well. So for support and resistance, you're going to look for areas where the support or the resistance has been broken. So you're going to look for that retest. That's a good example, but that example is a little bit sloppy. I don't want to use because it's not always going to be clean and perfect. We know that with trading. We know that entries are not always clean and perfect. Let's just see if I can find just a decent example of broken support and then a retest. Or broken resistance, whichever comes first. Okay, so this is a clean example, but not a very solid example. Preferably before I use this, I like to use 2 touches, but this will suffice as an example. Okay, so we had price struggling with this level here, and I am pretty sure if we go back just a little bit, we should find another level. But either way, preferably I like to have a level where it's touched twice, tested more than once before it broke. But we had price struggle with this level, did get rejected, did come back down, did push back up to retest the broken support, which is now resistance. And if we look at the RSI there, we had that test, and immediately on that candle it turned back down again. So you had an entry on this red candle here, you would have had a sell opportunity, and again 1 minute, 3 minute, 5 minute, doesn't matter what you took, you would have had a good entry there, a successful trade. So it's as soon as you start combining the RSI and you use the RSI to show you actual momentum, if you look at it from the perspective of trying to gauge the momentum of the current move, the RSI starts making a lot more sense and starts getting a lot more profitable. You're going to have a lot more successful trades using the RSI this way, because this is the way it was intended to be used. I'm not sure, to be dead honest, I'm not sure why the overbought and oversold thing is such a big thing, especially with new traders. Probably because it looks easy, and at a glance it does seem to, if you look at an overall chart, it does look like every time the RSI hits, price turns back up. But if you go and actually try to trade this, you're going to find out really quickly that it's not a viable way to use the RSI. So we have the RSI as momentum. If you understand now that the RSI shows you momentum, and you can start using that alongside with other indicators, it starts making a lot more sense. I'm trying to think quickly of another example that I might use, but not at the moment. We can use, for example, even indicators like super trend. You can use the super trend indicator as well to find tests where the RSI, where price goes close to the super trend line. There's so many indicators you can use. So anything with, look at that entry there, and there's another entry there. Not necessarily touching, because if we do if price does break through the super trend changes direction immediately. But if you use super trend, it will be price will get close to it, and you get those tests there as well. And then as soon as you identify that, just go with the direction. In this case, the direction is downwards. We had that example there. There was another example where price rejected, turned back down, the RSI rejected. If you got in on that candle, beautiful trade, absolutely beautiful trade. And this, in this example, it broke through. Once it breaks, just don't forget about it, look for a different asset. That's the one condition. Because if support breaks, that support is no longer valid. Okay, so even if it does turn back up after a break, you're not going to be able to know whether it's a false break or a real break. Right off the bat, you're going to have to wait it out anyway, and by then the RSI is not going to be giving you any information for, well, its entry signals. So once it breaks, forget about it. But you can use a plethora. Again, another time that price came close to the super trend, RSI tested, and as soon as it turned back up, you could have just gone with the current direction. Yeah. So a lot of things you can combine the RSI. You can combine the RSI with, as long as you understand that you want to know, you want to use the RSI for momentum. You want to, as long as the RSI is above the 50 line, we have bullish momentum, period. As long as the RSI is below the 50 line, we have bearish momentum, period. Don't go against it. This is one of the reasons the oversold and overbought doesn't really work out when you try to trade it, because you are trying to gauge, or you're basically trying to guess when the momentum is going to decrease and price is going to start turning. But you're going against something that has high momentum. You're going against a move that has already has high momentum, and you're trying to go against it. So it's not really viable. A lot of people quickly learn, especially new traders, they very quickly learn that it's a bad way of trading, but by then it's too late. They've already lost quite a bit of money because somebody told them buy oversold and sell overbought, which doesn't really make sense. Okay, so that's the most effective way you can use the RSI. This is one of the reasons the RSI is in my daily trading. I use it often. Often I use it daily in my trading. This is the way that I use it, because, like I said earlier, it is a momentum indicator. And if you go with momentum, you have a much higher chance of success than trying to go against it the whole time. So yeah, if there are any questions, please feel free to ask. If not, we're gonna call it a day. So let's see. If you guys have any questions, please ask. This is the time. I'll give it a few seconds because I do know there's a delay on the chart. Oh, sorry, on the stream. There's a delay on the stream. I know, but yeah. Let's while we give it a minute or so, let's see if we can maybe find an entry. Just a quick scan. If not, that's it. Okay, so no questions. That's awesome. I am glad you guys understood. I hope you understood it. And if you are watching this video at a later date and not the live stream, we are streaming every Wednesday. We're doing a live stream every Wednesday. So if you're not, we're posting the times and the notifications in the Telegram channel. If you're not on the Telegram channel yet, there will be a link below this video. Come join the Telegram channel. It's completely free, and you'll be able to see the times for the live stream. Otherwise, just subscribe to the channel and hit that notification button to be notified when that live stream goes online. I also post the live stream gets posted like a couple of hours, sometimes even a day before the time, it gets scheduled. So you'll be able to see that. Join in. It's a great time to ask questions. It's a great time to learn. It's a great time to get that clarity on anything that you were looking for still. Okay, so that's the RSI. Hope it helped. And I'll see you guys next weekend on a live stream again. And I'll see the guys in the Telegram channel soon. Okay, have a great one. Merry Christmas to all of you. That's tomorrow, so Merry Christmas, and we'll do the New Year's wishes next week. See you guys next week.